Check out Mike here. So, oh boy, woo! What a day! Oh my goodness! And I know I said in my chart last night, boy, I sure would like to see a pullback down here and da da da. Yeah, I would have never projected a 7% pullback on the Qs. Oh boy! I mean, it actually hit a circuit breaker. And by the way, as a side note, I found out I thought it would hit a circuit breaker. It did, but there's a timer that gets triggered, so you get 2 minutes. I found out to get back above that 7%, which it did. And of course, it had a nice, recovery and stuff. But boy, what a morning. What volatility you are seeing. And when we go through the charts, you're going to see a certain level for sure you got to put on there. It proved it today that thing is very important. Support and resistance. And so we'll look at that. We'll talk about, why do we go down? I know exactly why we went down. I'll tell you in this video. We'll talk about why, Josh Brown's talking about why he thinks this is just a bear market at this point in time. We'll talk about Jamie Dimon, what he says, kind of go back and piggyback what I was saying yesterday. And don't forget, bank earnings are tomorrow. I mean, do you think they're going to come out and say everything's hunky-dory? I don't know. We're going to find out, because right now, every CEO is going to pull guidance, right? And I'm going to make this video shorter than the last few. I apologize. They've been longer than usual. You know me, I don't like to usually go over 15, but just a lot of stuff going on, okay? But the day was a little quieter on the tariff front, so that was good. And put your questions for Saturday's video, because I got a lot of questions about this. So I'm going to pile it into a segment and really let you guys know what's going on behind the scenes, okay? It doesn't get any news coverage and stuff we don't even know how it's going to affect us, okay? So just FYI on that. Also, a certain group of stocks, you better be very careful if you're in them, because the word on the street is picking up in DC of something they're going to do to these stocks, and so I wouldn't put it past them. So just FYI. So anyway, let's get into this real quick. You don't want to miss those interviews. Now, obviously, the S&P here was, what a drop down, about 6.9, I believe it was, in the S&P maybe. I think it was definitely 7 on the Qs for sure. And what happened, though, really, I mean, look, I talked about I wanted to see it come down. I didn't think 7%, you know what I'm saying? Just like a 3% pullback or something would have been cool. But, you're in a volatile time when you're looking at it going, oh, we're only down 4%? That ain't bad. What the heck? But all we did was come down. And when I go to a 4 on this, you'll see it. We just mitigated this 4-hour fair value gap. That's all we did. You can see this trend line started forming throughout the day and everything. Just kind of kept bouncing off that. So we'll keep that in place right there. But that honking 4-hour fair value gap got mitigated to the penny. And it came down the golden pocket. That's why fibs are powerful. Fair value gaps are powerful. And it bounced. Had like a 3.5% bounce from there. And so we kind of mitigated that, right? So is that the liquidity down, right? That's what we're always searching out liquidity. Because, I mean, when you move up 10%, guess what? You expect to move back down. You just might not be thinking it's going to be 7% in one day. But we also know these big moves happen when? During crashes, bear markets, that kind of stuff, right? That's when you get them. And the next day, according to anything I read, which I tell members, usually it's not good the next one, even sometimes 5 days or even a month later, okay? And so, look at this. Definitely put that JPM collar on there, 52.90, I believe it is. Because that thing, you can see it acted support, tried holding it for an hour and a half, but when it lost it, look at that. Woo, down we went, another 3.5%. When it came back up, you see resistance, trying to hold, resistance, boom, right? And so now we're beneath it right now. So if you can get above that, obviously make it support, then we can finally move up. But that gap right there, I mean, even to get back to the gap from here, I believe it's like 3.5%, which by now, I mean, we're kind of used to those moves, right? I mean, which is crazy, I know. But we're kind of used to that move. But at least we realize, I mean, more you're looking at this, again, who knows what's going to happen in DC and what, we've seen the power of a tweet and everything else. But you're definitely more and more seeing why the JPM collar, the top level, is so much lower than it's ever been, really. And so that's not a surprise there, I guess, anymore. But, looking at this, is liquidity up or down? To me, it's up, right? So if there's no tweets out tonight or anything else, I won't be surprised at all to see us actually go up tomorrow. And that trend line right there will be resistance. But again, that's a pretty good move. I mean, right now, 1 to 1.5% seems like child's play at this point in time. But on the Qs, there is still some liquidity down there. If they want to come grab it overnight maybe or something, that's what we got to find out. But the way it's looking right now, I could see us moving up that trend line for sure. I mean, it's all about where you're going to go to grab liquidity. Again, I can't predict if something bad is going to happen overnight with the bond market is going to flip out, but that's market structure. That's how you make it. You keep back testing the levels. And that's what the Qs did today. It back tested that level, and it bounced and held so far. Okay, so that's kind of key, I think, for sure. And again, we still got well above us, 200 moving average, 21 SMA, all this other stuff is going to come into play for sure. And again, where we reject yesterday, 0.5 fib, that's what we're going to look at again tomorrow when we start to move back up to see if we get rejected there again. And the one thing you don't want to see is this right here. Look at that death cross, boy. Almost there. Almost there. And, you know, look at that. I mean, that's almost there on the Qs. The really is the S&P more than anything else. And you can see right there with that big drop. It's like right there, like, hey, hey, hey. And normally I've showed you before, and you get that. If we do get it, what happens is you usually will see a bounce. Don't be surprised if you see a bounce when that normally happens. Okay, so just FYI, I'll move the gamma flip around right there. And so that's what we're going to find out. But again, you know, look what's going on. Consumer staples, defensive. Utilities, defensive. Even healthcare was down. I mean, again, everything's kind of red. But green is consumer staples. Those are defensive ones, right? That's what you're kind of looking at to see what's being bought up every day. Is the market still going defensive? Really? Is that what we're doing? And you see the VIX. I mean, the VIX, oh my goodness. I mean, it got up. I think today I was at 55 again. I think it's hit 55 3 or 4 days in a row now. And so, you know, you can't have a sustained rally with that. You get good pops. That's why you're going to get this. I mean, if volatility sustains, you're going to get major moves every day. I mean, 1.5%, 1 minute candles all day long without a problem. And this is what I was telling you, I did a whole video on this just a minute ago. For the members, I mean, the MOVE index. This is what you don't, the VIX is children, right? The MOVE index is the volatility index for the bond market, which is what's happening right now. And if it breaks above that box right there, oh, the market's in for a deeper, much deeper move down. That's for sure. And it's been doing what? Setting higher highs. And that's not what you want. Pull it up, go back and look at 2022. And then if you go into a recession, it just goes through the roof. You don't want volatility in the bond market. That's what's been happening. I've been showing it to you. Again, that's why the president them changed course. They can, you know, again, they can say what they want to say. We all know that's what it is. And you ain't never heard no president on the planet talking about I was watching the bond market. Not any of them, because none of them know what it is. Okay, nobody follow it. None of the presidents follow the bond market. They shouldn't be. That's why they got advisors. Okay, and so when they say that, it's like, yeah, okay, that's why they changed course. You cannot lose the credit market. Everybody on the TV was talking about that today, and even Jamie Dimon and all the rest of them. But with these moves you're seeing, you know, this is why you're hearing stuff like this.
I think this is like the aftermath of yet another bear market bounce. And these things are mentally debilitating for investors precisely because of how quickly they slip away. Yesterday is the 10th best day of all time for the S&P 500. I heard that breathlessly reported everywhere. I saw the tables, all the graphs, all the charts. What didn't necessarily accompany that commentary was the context in which we've seen the other 9 best days of all time. And I'll spoil it for you. Typically, they take place in years like 1933 and 2008 and 1931, and they happen when the market is in a 75% drawdown, a 48%. In October 13th of 2008 was the 6th best day ever. We had a huge 11.6% run. We were already down 35.9% from the high. Yesterday is peculiar in that it didn't take place in a statistical bear market, down 20% or worse. It's a little bit shallower than that. But from my perspective, close enough. Horseshoes and hand grenades. The median stock was in its own bear market. Most sectors that matter with market cap were in their own bear market. So what happened yesterday, while it was exhilarating and remarkable and a lot of fun and a lot of backslapping and a lot of rich kids who are really proud of themselves because they grew up insulated from the consequences of their own actions, the end result today is, oh, wait a minute, maybe we put the financial crisis on hold, but we still get to have a recession. So that's how I feel. And I don't want to get too negative. I'm not out shorting the market. I'm not a hedge fund. But I just want to give people a really accurate picture that this feels more to me like a classic bear market than it does a correction or a dip or a quote-unquote healthy pullback.
Yeah. Because this is the kind of moves you get in the bear market, right? You get these crazy rallies up, shows you many times, right? And then this big move back down, even though this was a freaking huge move back down. Again, these are... You actually see it in history, folks. Let's be real about it. I mean, what do we see? The Dow dropped 1,500 points back-to-back for the first time. The Qs, second greatest day. Not the first greatest day, of course. I think there was one day in the dot-com bubble that was better than that. Again, the biggest intraday reversal in history of the stock market. Do you realize what we've been through? I keep thinking about that. Am I the only one that thinks every day, like, wait a minute, we shut down the world? Like, seriously? And we're setting records now? Like, this is what we're doing? And the Dow's not even in a bear market? Didn't even touch a bear market, and we're already seeing this stuff? Like, wow. I mean, that's crazy, right? I mean, to think about that. That is amazing. And I don't think the records are done, to be totally honest with you. So we'll see. I mean, let me know what you think in the comments about that one. All right, let me know in the comments, what do you think? Are we in a bear market? You think it's just, nope, we're going to go back up from here. We're just going to stay out and stay kind of range bound until this whole thing gets, subsided and everything and done with? That's what we got to find out. But here's what Jamie Dimon had to say, and we'll hear a lot more from him tomorrow. And understand, like, when you hear him, I don't call people names for no reason. I rarely do it. But when I tell you the Commerce Secretary is a disaster and they need to lock him up and like put him away, what happened last night? Who spoke last night? Him. They put him out there, I think it was 5:30, 6 o'clock, whatever it was. And he started talking. I need to go home and get a shower. I was watching my son do jiu-jitsu. I need to go home and get a shower because I felt so filthy and listen to this man talk. Changed my shoes, so much BS on the floor. And the comments just blew him up in the bottom. He can't stop. He can't help himself. He wants to be a showman and get out there, and you can tell he's lying through his teeth. Like, just be quiet. Put Besson out there. And of course, what happened to the stock market today? Well, see you later. He's back to his old rhetoric as usual. And they were roasting him. They were like, dude, just stop. Like basically telling him just to stop, man. You know what I'm saying? Like, let the bond market calm down, dude. You ain't helping. And here's Jamie Dimon to let you know who he wants in charge. The same thing I'm telling you.
And then, of course, when they put the tariffs in, it was way beyond what people expected. That will cause a little inflation, slow down growth. But I hope what they really do is let Scott Bessent, who I think is a professional, negotiate. I know Japan's here. I gather Korea, Vietnam have called, and then eventually Europe. Get those things done quickly. If you want to calm down the markets, show progress in those things, and let Scott take the time. Trade deals are very large and very complex.
And I read 3 days ago they were putting the Treasury Secretary in charge of the negotiations with Japan. That tells you something. That's the Commerce Secretary's job, and the top trade officials. Ain't none of them doing that. And Japan is key. Why is Japan key? For many reasons. One, they hold the most debt. They buy more debt than any of our debt than anybody else. We have multiple military bases there. Okay, that is key. And also they need stuff from us. Okay, they buy stuff from us already, and so we have to keep them in the fold. Very important for strategic purposes, militarily, also economically. Okay, so you can't mess that one up. And they're not going to be pushed around. Okay, this whole thing about we're going to force them to buy our cars. Dude, they make Toyota. They're like, bro, we're the number one seller in the world. We took over, we came to the United States, we became the number one seller in the United States. Like, why are you trying to force your cars on the roads? Now, when you look over here, it shouldn't be a surprise that the Mag 7 sold down because we talked yesterday. All of them were coming to resistance. Every one of them stopped at resistance. You just keep scrolling down here. They were either hitting moving averages, coming up to a major level. And so no surprise they got left there yesterday. I mean, it was a gigantic freaking move, of course. What's amazing, though, when you look at these charts, I'm going to show you a couple others. Look at the moving averages. Look how far below the 200 moving averages the stocks with the most cash, the most revenue, really the most stability, right, are at right now. And you see someone with death crosses. I mean, just a mess. But so it's no surprise they pull back like this, and obviously, because, the video went below 100 again, right? But it came back up, okay? And when you start looking at this, again, the market cannot move up, especially all-time highs, without these stocks. Impossible to do it. Not going to happen. Like, you have to have these stocks moving back up, okay? Prime example, look at Hood here. And again, this is on logarithmic, so it messed up all my lines. But what you're seeing is, if we do get a move up, watch stocks like this. I can show you 100 charts like this. Hood, they got all these trend lines where they just reject them. But if we end up getting a big move up, and look at this one. It didn't even below 200. You got all the Mag 7 or 8, all below the 200, all the semiconductors. And here's stocks like Hood, high flyers, above their 200 moving average, and even close to a death cross, right? And so if we get real momentum of like maybe 3-4 days in a row, like, this thing is going to fly. It really, I'm telling you, it's going to fly. And there's so many like this. You'll see. You go over here, let's pull up, probably the one that's held the most, which amazes me, is Palantir. We all know. Like 100 times sales, I think, is still what it's sitting at. The fundamentals are insane to me. But when you look at this one, look at it. It ain't even touched this 200. Hadn't even touched it. It's only down 28% total. Heck, Tesla, Microsoft, all of them are down more than that. Look at Oklo. There's another one I told you, right? This thing went down 71%. Still down 60%. But look at that trend line. Keeps bumping up against it. And this one's above its 200. Not even close to a death cross. It's crazy. It's like the opposite day, or I don't know what the movie was, Groundhog Day, whatever it's called. But it's like the opposite day, I think, where it's like all the big boys who carried us for a long time are sitting there. Their charts are like crap. And then here these high-flying stocks are, nowhere near the revenue, nowhere near the cash, none of it. And no death crosses, above their 200s, just sitting there waiting to explode. And I was going to tell you guys who are investing in Chinese stocks, be careful. I'm not telling you not to do it, but it's picking up steam up there in DC that one of the ways if China doesn't come into the fold is they're thinking about delisting these stocks. I know we talked about this a long time ago, but this time, I don't know how the process works. So if you do, let me know. I assume they're going to let you know if the guy who's going to be in charge of it, who ain't even took office yet, he said, when I officially take office, I will definitely be looking into this one because, again, it's a retaliation tactic, right? And so I assume they'll let you know and say, hey, you better sell this. They wouldn't just, screw Americans over who own these stocks and say, you better get out of this because it's about to go away, right? I assume you're not just going to wake up one day. If you've been through that before, let us know how the process works. But I've never been through it before. But I assume you're going to wake up one day and just find your, brokerage account like zeroed out with those stocks and stuff. So now we do have, again, earnings, all the banks. Here you go, buddy. And so these are what everybody's going to be looking at. Listen to Larry Fink and all these guys talk tomorrow. And we have PPI data, core PPI month over month, consumer sentiment on inflation, all that fun stuff. I can't imagine it's going to be good at all. But don't forget, we did have one of the best CPI prints we've had in months. CPI actually went down. Unemployment claims came in line, and the market still dropped like a rock. I mean, that's kind of like where you go. That's when you know there's something else working behind the scenes, okay? Because you know dang well, if first CPI report we had in a long time, we dropped, came in under expected, the market normally would rock 2-3%, and we dropped 7%. So, and unemployment, again, people are still employed. People are still employed. So, again, no Fed put. That's what the market's looking for as well. Again, I'll talk a lot about this more in Saturday's video for you guys. So anyway, please hit that like, subscribe button. If you got anything out of it, please put your questions in the comments for tomorrow's video, or Saturday's video, excuse me. And think about signing up for the membership. Less the McDonald's combo. It's everything you get with it. And I'll see you guys not tomorrow. I'll see you Saturday. Bye-bye.